Good morning and welcome back to Morning Markets from True Potential. Today we're going to be looking at the week ahead and what we'll be focusing on from an economic data perspective, interest rates and corporate earnings. Looking to the week ahead, it'll be a busy week in terms of economic data. Kickstarting the week will be business survey data, known as the PMI readings. We'll pay a lot of attention to this because it gives you a timely reading of the business conditions and what businesses are saying in terms of employment, new orders, and just general economic activity. We'll get data from the US, UK, from Germany and France, and also Japan. The key trend that we've been watching over the last few months is just the strength or the continued strength within the services as consumers at the margin continue to prefer to travel and enjoy experiences rather than purchasing goods. We'll be looking for changes within the manufacturing sector to see if we start to see a bottoming out of the recent declines and whether it actually starts to tick higher. Elsewhere this week, in terms of data from the US, we'll get the initial reading of US GDP, that's economic growth for the second quarter of the year. The first quarter was very strong for the US economy, grew by 2% on an annualized basis, and that was really driven by consumer spending. Economic growth is expected to slow from that 2% annualized figure to around 1.5%. Also in the US will be inflation data at the back end of this week, known as personal consumption expenditure. Expectations are for inflation to fall further from 4.6% to 4.1%. The key reading will be the inflation ex food and energy, because these are more volatile components of the series, and it's the series that the Federal Reserve, the US Central Bank, really focus on. The US Central Bank will be meeting this week to decide where interest rates go. Expectations are that they'll have to put interest rates up by 0.25%, getting to an upper bound of 5.5% in the level of interest rates. After pausing last month, the general trend for inflation has been lower, economic growth has been firm, and the labour market has been strong. So there is a real sense within the markets that interest rates will have to go up. The European Central Bank will also be meeting. Again, interest rates are expected to go higher by 0.25%, putting their level of interest rates at 3.75%. It will also be a very busy week in terms of corporate earnings. We'll hear from the likes of Meta, Microsoft and Google. Their share prices have done exceptionally well year to date and putting them on quite high valuations relative to history. The market will be focusing on whether earnings and sales come in ahead of expectations, but also what they'll be saying on artificial intelligence. That's gained a lot of momentum and hype within the markets. We'll be seeing what their developments are. And we'll also be looking at other companies in different sectors, such as companies like eBay, MasterCard, McDonald's, General Motors, and Boeing. That's everything from us today. Thank you for watching, and we'll see you tomorrow.